Hi. So let's talk about what happens when you don't file a return for a business, especially payroll tax returns. If you fail to file the payroll tax returns every quarter, then the IRS also has another type of substitute for return. It is based on the Internal Revenue Code 6020B, paren B. That is the legal code where they are allowed to file the substitute for return on your behalf for those payroll taxes. When they do that, they look at the last payroll tax return you filed, and then they add 2.5% for inflation. So once again, you're going to be owing more taxes than you originally would have if you would have filed the return on your own. And also additionally have the failure to file, failure to pay penalties, interest accrues, etc. Also, potentially you might have federal tax deposit penalties if you did not keep up with filing your or making your deposits timely. So again, with the payroll taxes, you also have the option to file your own to replace what the IRS filed for you. Now, as far as corporate returns go, a lot of times they don't always have enough information to file those, and so they may issue a summons in that case for the financial information. But you never know. Maybe every single income from your corporation is reported on some kind of 1099, etc. So they might just take that. And then, of course, they're not going to know what all your deductions and expenses and everything were. So that's not going to result in a good tax balance for you. So, and again, you always have the option to replace what they filed with your original return. And I highly suggest you do so. So I always say it's so much better to just file the return and deal with the collection later if you can't pay it than not file the return. It always just ends up costing you more. So let's get on it. Give me a call, email me, contact me through this app, however you'd like. And let's get on the ball and get started taking care of this before it ends up costing your business even more. Have a good day.